Bloomberg Audio Studios.
Podcasts, radio, news.
Single Best Idea on YouTube Podcasts, Apple Podcasts. Good morning to you. Doing this very quickly today. It's a huge day here with this Fed meeting. Our goal this morning was to get away from the 25, 50 basis point frenzy and actually talk about some of the underlying themes. And there was a real set of rich conversations today. Alicia Levine was just outstanding on the quality of the market. Greg Bowdle at BNP Paribas saying he really has caution on the market, but looks to the volatility to be substantial. So we did a whole derivatives option vamp there as well. So joining us, Gina Martin-Adams with Bloomberg Intelligence, and to talk to her about her enthusiasm about corporate earnings and, what the Fed's going to do. Gina Martin-Adams to the next, and the next after that, and the next after the next after the next after that Fed meeting.
There is this perception that rate cuts have really elevated earnings growth. And the most direct way that rate cuts would have elevated earnings growth over the last cycle would have been through an improvement in EBITDA, right? You see interest expense decline. You ultimately see better earnings growth. Are we actually getting there or not is a big question. We actually find that the impact of lower interest rates on interest expense was de minimis, even through the last cycle, because you saw this larger deleveraging experience. So the stronger impact is not in between revenue and earnings. It's actually on the revenue line. It is the Fed cuts ultimately result in stronger economic conditions or borrowing by the private sector, which ultimately feeds through to stronger revenue growth for the S&P 500. It's not that rates are going down so they can borrow cheaper. It's actually rates are going down so that their customers can borrow cheaper to fuel their revenue line.
Gina Martin-Adams, just brilliant today, combining in her technical analysis with fundamental analysis over to this path that the Fed is on. It was wonderful to talk to Jason Furman of Harvard. That can be a 3-hour conversation. He has done a great job of taking 2, 3, 4, 5, 6 inflation series, annualizing them out to, I think it's a summed Excel spreadsheet of 21 data points to try to figure out where the vector is. We didn't do that. We talked a little bit about the Fed. I thought he was brilliant about inertial force and the Taylor rule. That's a lot of physics envy, but basically once you get on a path, you stay on the path is the inertial part of it. And, think about the weight sliding down the, remember physics, F equals ma, remember that? A lot of, physics equations there. It was physics envy with Jason Furman. But we finished strong on where he is on public policy at Harvard. Jason Furman, the candidates and tariffs.
It's just crazy that we're actually contemplating putting a 20% tariff on every country in the world on every single thing they make. That'll raise prices for American consumers. It'll raise inflation. If the Fed doesn't look through it, it will also result in higher interest rates. It won't reduce our trade deficit at all because a combination of exchange rate changes and or foreign retaliation will happen, right, which means instead we'll just get less imports and also less exports and all the jobs supported by exports, all with no negotiating theory at all. What are we trying to get from Australia? Right. Are we trying to bring the ballpoint pen industry back to America? It just makes no sense at all.
There's a clinic from Jason Furman. I would mention on those two outcomes, the idea of foreign retaliation. That's what everybody looks at. But there has to be humility, particularly from those younger, huge humility about our pseudo-economics. And if it could break the dollar trend, which has been dollar resiliency and dollar strength, we forget totally in America what a vector of sustained dollar weakness looks like. And that would be really, really interesting, as mentioned alluded to, I should say, by Jason Furman there. Our special coverage today of the Fed, we'll do what the Fed decides. Thank you for those of you that tune in on our many different platforms for the show. The audience for that is just ginormous. That's a fancy term. I got that from Nielsen or one of them. Ginormous is a very big term. We're out on YouTube. Subscribe to Bloomberg Podcasts on your commute, Android Auto, Apple CarPlay. Good morning on the corridor, 99.1 FM Washington. Our flagship, Bloomberg 1130 in New York, 92.9 FM in Boston. On Apple Podcasts, on YouTube Podcasts, Single Best Idea.